Hey everyone, this is Fugu here from Creator DAO, and I'm here with Figue from Paladin. Welcome.
Thanks, man. Thanks for having me.
This is actually a very unique interview because this is the first one where I'm speaking to somebody that I've actually met in person. We met face to face, actually me and the whole Paladin team in ETH Denver, right?
Yep, that was a nice moment we had.
So that was really cool. And I mean, I could just vouch for you guys in terms of credibility. I know for sure that you guys are a great team, smart team. You are not a scam or a rug. You're actually real guys. You're dedicated to the cause. You have a great project, and you have some great backers as well. I just wanted to ask you about the ETH Denver concert. About the ETH Denver conference. How was it for you guys?
I mean, it's pretty revealing you call it the ETH Denver concert, right? It was a super nice event. We're extremely happy of having been there because we're a European-based team. Half of the team is in the US, but half of the other team, myself included, are in Europe. So it's important for us to come and meet the European community. For example, Fugu and I have been acquainted on our Discord like a few months back. So it was actually very surprising. We met when we were queuing in the ETH Denver queue, right? Which was totally random. And that's a bit the magic of ETH Denver. You have like so many different people from so many different backgrounds. And you also meet people who you've been working for months, even years.
Well, for myself, it was definitely a breath of fresh air because waiting in that line for about 2 hours every day to get into the main hall and listening to the pitch of all these different projects, I heard the most bizarre ideas pitched to me. So many bizarre DAOs and crazy ideas. And then when I finally saw you guys from Paladin with a great idea, with a great product market fit, I was like, I gotta chat with you a bit. And I was really happy to meet you guys. What were the main things that you guys accomplished when you were at ETH Denver? Do you feel like you made some connections that are going to help you guys improve the project, and what else?
Oh, yeah, definitely. So ETH Denver comes two shapes for the team. First of all, it's our offsite team because we're a fully decentralized team. Like there is no big office where everyone works. We each have our different places where we choose to work, and twice a year we just choose to meet somewhere and work together, do a bit of team building because well, you have to. We work together all year, and on top of that, it allows us to meet business partners. So Denver was a lot about meeting the people we were working with and meeting the people that we didn't have time to meet and to find partnerships with, which was super proactive for us. It was super proficient. We're very happy about all the people we met. The problem with crypto is that sometimes when the projects don't know each other and you're not recommended, it's hard to get acquainted because everyone is so deep underwater. Even when you have a market that is so slow and the gas is low, like most of the teams are like, they're hustling.
Do you plan to have more of a presence at other ETH events? Will you be showing up to more in the coming year?
Yeah, so our main one is always IPCC because I'm French. So we tend to be at IPCC and we'll always be. It's our main event. I'm not sure about ETH Denver, depending on all the other opportunities. We don't want to be in every event. Perhaps we could be via the DAO because the DAO is going to be empowered quite a lot in the next few months. But the idea is to be able to meet the community, to organize things with all of our contributors. Because what you forgot to say is that when we had lunch together, it was with all of our contributors, right? We at least that were in Denver. So we try to make events where we can meet the people we work with. I think that's the most important thing for a DAO.
Nice. And there are some rumors that maybe part of your team will be present at their permissionless conference in Miami in May.
Yep, most definitely. So I was supposed to come, but I'm sorry, guys, I'm going to have to bail. Probably our head of communications, Alejandro, will be there. It's not a rumor, we'll be there.
Awesome. So we can meet for a second time.
Oh, nice. He'll be there. Cool.
I'll be there as well for Creator DAO. Well, let's get into the meat and potatoes. What is Paladin?
Okay, so Paladin is a project that's aiming to democratize activism in the sense that we want to create economic engines that are going to finance the future of governance endeavors. The idea is that today a lot of activism is led by by experts and very highly funded teams. We think that anyone could have access to all of these. We've distributed governance assets far and wide in traditional finance, but also in crypto. The problem is that most people are not participating. So what's actually very important to understand, if these, especially in crypto governance token and the protocols that they're governing, become the next financial infrastructure, there are huge challenges that will be decided by governance. And it means that there is a lot of power that can be taken from the influence that will be in these protocols. So what we're trying to do is give access to a maximum amount of people to this governance and to their participation. We're trying to transition to a participatory economy and finance the people who want to do so. So the way we're doing this is that we're creating what we call financial engines. The first of them, it's the one we've been focusing on for the past year, is vote lending. So we released Paladin Lending, which does vote lending for Aave, Uniswap, Compound, and Idle Finance. And we just released a month ago Warden, which does a boost, which is a boost marketplace for Curve, sorry. And it's going to become much more. It's going to become a global vote lending, full stack vote lending platform for Curve. So it's very important to understand that this is going to be a financial source of revenue that will be redistributed to people who want to participate in governance via our different softwares.
Well, this is interesting because, I mean, back in the early days, you guys just described yourselves as a governance lending protocol, but it seems like you've expanded the vision into just decentralized activism in general.
So we didn't actually expand the vision. It's just that we remained a bit more private about the global goal of the protocol because it was too complex to begin with. And even still today, when we're explaining everything, the vision of what we want to build, it's a bit complicated to really put it into words. Now it's a bit easier to explain because we announced our tokenomics. So the whole point of our tokenomics is that the protocol revenue is going to be recycled into more governance opportunities. And the more dApps we release, the more we're going to become a full stack approach to all of the different influence opportunities that exist in crypto. And once we're there, basically the token is going to crystallize the value of influence. And I think that's something very important. We can go into it later, is that the goal of Paladin is that we can crystallize the value of influence and basically become an ally of contributors. We have to understand that DAOs will only be DAOs on the long term if we have a continuous flow of contributors, right? No one is going to contribute for 90 years. Some people are going to leave, some people are going to die. That's life, right? So we have to find a way to incentivize correctly in new people taking up the helm of these DAOs. And these contributors, well, they're gonna have to have the opportunity and the incentives to do it correctly. The idea with Paladin is that we're going to create an engine that's going to allow the different DAOs, especially the large one, because they're easier to work with at the beginning, to keep going, even when the core team is down. Because at some point, if we're really trying to build immutable and long-term decentralized protocols, we have to aim for protocols that are going to last several hundreds of years.
A lot of people, you know, in the crypto space, they're just thinking like in the 1 year, 2 year time frame. You guys seem like you're thinking in the 20, 50-year time frame.
Yeah, so we're at the Paladin team. We're building with I would say, depending on different projects, with a 3 to 10 year view, more 5 to 10 year view on the total amount of things we want to build as a core team. We'll probably have more ideas on the during the adventure, right? We've only been working for a bit over a year on the project, but yeah, it's definitely meant to last longer. And the whole point is that we've been trying to empower our own DAO the most possible, so people are incentivized to take over the helm. And I think that's very important, because the more you as a core team are at the helm of the DAO and the project, the more it's going to be hard to create and to conceptualize the DAO without the core team. And that's the problem, right? If you look at what happened on all the different projects where Andre Cronje left, everyone was thinking, oh my God, what's going to happen? But there's someone who took the helm of almost every project. So the projects will keep going. And even if he disappeared, like most of the project would keep living on because they're only mutable contracts. And I think that's some very important notion.
For sure. Well, I have a question about how this token borrowing thing is working. Not so much like the technicals, but just on the basic level. So most people that hold governance tokens, they're aware that you can use that for voting in different governance votes, whether it's snapshot or whatever. But they might not be aware that you can actually lend out your voting power. Like some people have seen that maybe where you can choose a delegate in the case of Gitcoin and so on. But how do I, as let's say a holder of Aave token, how can I lend out my voting power?
Yeah, sure. So you have different alternatives. One, we're not the only one on the market. I think I'm going to show why we're the best. The way we work at Paladin is a bit different from other traditional vote lending or bribe models. What we do is that we sell the delegation mandate. So we bet on the fact that most protocols are going to include delegation in their protocol, simply because without delegation, you cannot scale governance, because direct democracy does not work on the intensity that is asked to manage DAOs. So if you look at almost all of the blue chip projects, they have delegation. And if you look at growing projects that do not have delegation, where they have to include it. Olympus just released the delegation, for example. This is important. So what we do is that instead of actually selling the token or lending the token like a traditional lending protocol does, what we're doing is that we're only selling the delegation mandate. So the token stays in your wallet or in the smart contract. For Paladin, which means Aave, Uniswap, Compound Idol, it stays in the smart contract. For Curve, it stays in your wallet. That's really important because it means that outside of smart contract risk, you do not have liquidity risk, you do not have counterparty risk, all of these do not exist. You're simply doing in a decentralized way, allowing someone else to vote in your name. And what's really important and cool about this is that if you look at it, most people do not actually care or participate in governance. Most protocols have roughly 5% of participation of voter turnout. And I think that's a big problem. It's a big problem for regulatory reasons, because you can build all of the decentralized technology if you want. If you gave 15% to investor and the team has 15 to 20%, and everything is invested, of course, in this logic, you realize that you have 5% participation where the VCs or the team can actually have direct control over the DAO. So it means it's not decentralized. So it's actually going to become quite a problem in the near future, I believe. We're being extremely careful about this ourselves. We have 50 to 70% voter turnout right now because we've been pushing a lot delegation in our own DAO. So back to the actual product, it's important because of this reason. And the second reason why it's important is that most of the time, and we're seeing this a lot of proposals are having a hard time reaching quorum. Why is that? It's because there isn't much attention on most votes. So it's hard to get the attention right for people to care and to vote. And it's hard to have enough people to care just simply about voting in general. There's a huge problem because right now it means that decentralized governance is not really working, just in terms of participation. And that's a problem because if we really want to do decentralized finance, if we don't have people participating and pushing the protocol forward, then it's just not going to work on the long term. So
what are some of these? Oh, sorry.
Go ahead. Sorry. No, my bad. Go ahead.
Oh, I wanted to ask, what are some of these blue chip DeFi protocols that have delegation right now?
So Aave, Uniswap, Compound, as I mentioned previously, Index Coop has delegation, and they're actually very interesting business case because they didn't used to, and there was a complicated Ethereum price movement, and they were not able to reach quorum to modify the parameters during as an emergency, so they had to add delegation to make sure it worked. So that was interesting. I don't have all the projects in my head, but you have to think that most of the big projects have delegation into it. Curve doesn't. So I think they're an exception. But yeah, most of the protocol actually do have embedded delegation.
Do you guys have Index Coop on your platform yet?
No, we don't. We don't for multiple reasons. We've had a large discussion with the team and with the governance on their forums. There was for and against. My guess is that Index Coop is a bit of a special token because they're the first one who tried meta governance, but they haven't yet figured out how to do it efficiently. It's very complicated. A few other protocols are trying to do it. I think Redacted Cartel and Lobis are trying to. Olympus might do something also through them. So it's very interesting and they're extremely powerful. I do think we need a bigger layer of understanding and of clarity to actually start doing meta governance correctly and do vote lending on top of it. Right now, if we just release today, I think it would be much more ripe for abuse because most people actually don't understand how it works. And look, Index Coop doesn't have has the same participation problem as any DAOs, which means that you need a substantially low amount of index whose price is actually really low right now to win a vote. So it means that right now you probably have a 1-to-10 ratio just by buying index and voting for it and earning the vote of the whole coup. These are, you literally have governance arbitrage right now.
So a question about the vote lending. If somebody, for example, wants to vote on something from Uniswap, most people know that you have to vote only with what you had when the snapshot takes place, correct?
Yeah. So that's the big difference with other architectures, and we're being very careful about it, is that we built several guardrails to avoid or minimize governance attack. The logic behind outside of like governance attack are bad is very simple. We're building on top of different protocols and governance systems, right? If we start building negative feedback loops on top of these governance, we're going to break our own opportunities, right? Because we are on top of this governance system. So it's in our interest as Paladin to build the most positive feedback loops possible on top of this governance. And that's literally what we do. Our job today is building positive feedback loops on top of these different systems. So for example, as you mentioned, you can only borrow and it's only viable if you borrow before the snapshot. Why is this important? Because if you let people borrow during the vote, you can create some kind of ping pong battle when it's just going to be who can buy the most votes and who wins the award this way, which I think is uninteresting. What's interesting about Paladin is that everything's happening on chain. So you're seeing who's taking position and who's basically gearing up for the vote. And I think that's a very important notion, is that if governance battles are made publicly, there is much more awareness and much more opportunities that are going to appear. That's extremely important. The second thing we built is that we curved our interest rates. So like lending protocols are dependent on the utilization rate of the pool, but not only. They are also dependent on how much you actually borrow compared to the quorum threshold and the proposal threshold. So the more you try to buy a proposal or more you try to basically outright just get all the votes as possible, the more exponentially expensive it's going to be. So for example, if you try to buy just a whole compound vote, it would cost around $25 million. Well, much less right now because the price crashed, but it's going to cost over $10 million. And that's important to understand, is that by doing so, we're minimizing the extractable value you can achieve from the actual governance attack.
For someone who's interested, how do they make sure that they borrow the voting power in time? Because it's not always announced in advance when the snapshot is going to take place.
Oh yeah, for sure. So you can actually have an educated guess, of course, but the idea is that usually each different DAO has a different process for vote, and the vote doesn't pop up randomly on chain, right? If it's on chain, somewhere it's on snapshot. So usually you have a discussion, and then they're saying, okay, let's do a temp check, or the proposal will go live in a few days. And during the discussion or at the end of the discussion, you should borrow. And at that point, because you borrow usually for a week or more on Paladin, otherwise it's not going to be really interesting for you. You just have to gauge how it happens. So if people actually have questions, they're free to come into our Discord, and we're going to help them with that. It's not that hard, to be honest.
Can you just walk me through quickly how this process of borrowing governance power works?
Yeah, so right now we're talking about Paladin lending, right? We have a second product that works a bit differently. But on Paladin lending, what people do is that they're going to see an interesting vote, or they're going to have an idea of a proposal. That's two different things, right? You can want to create a proposal, and you can want to borrow to position yourself during your vote. So to create a proposal, you're going to write the proposal. You're going to see if people agree. You're going to have discussions with them. Then you're going to take out the loan, create a proposal. And usually you need to have the votes delegated to you for 7 days, which is all the time of the vote plus the cooldown period, the time lock period. Sorry. So you have this solution, and the other one is there's a vote coming. You have the discussions on the farm. You're discussing, and at the end of the discussion, when someone explains that it's going to start going on chain, at that point you have to borrow it. You have to gauge how much time it's going to go live, and you borrow before, and at that point the snapshot is taken. You can vote, and then that's it basically.
I just brought up the Paladin Vote platform on the screen. Let's say I wanted to borrow some voting. How do I actually do it? I see there's a borrowing area and there's a supply area. What do I do? So
if you want to borrow, you simply go into the borrow tab. You choose the governance token you're gonna borrow. So let's say stake Aave. And so this is Aave. Stake Aave has much deeper liquidity for reasons we can go over. You just choose how much voting power you want and until when you want it. And it's going to tell you how much it costs.
I see. Okay. So let's put it until March 31st.
Yeah, so it's probably not going to show you a price because you're not connected with an account. So
Correct. Let's connect the wallets. I see. So I have to have also supplied as well.
no, you don't actually need to supply to actually. So unlike traditional lending protocols, when you need collateralized loans, on Paladin you do not need any collateral because what you're actually doing is that you're not loaning the token. So there is no counterparty risk. You cannot get liquidated.
Got it. Got it. Okay. So you can borrow voting power, but what's the supply?
Oh, okay. So we're a decentralized platform. So it's a marketplace in the sense that the voting power you're borrowing is actually voting power people are lending. So for example, if you look on our stake Aave pool, which is the largest one, you have 31,000 stake Aave, so Aave voting power, that's available to be borrowed. So it's basically people who are depositing to earn revenue. And that's something that's really cool, is that Paladin was thought out as a money Lego, not just as a protocol, which means it's extremely composable. I'll give you an example. You have Aave, for example, which is just you deposit your Aave and you're going to earn vote lending fees on top of them, right? But you also have stake Aave. And stake Aave is interesting because it's a wrapped Aave that's basically serving as insurance into Aave. And in exchange, you're being paid, I think, 6.5 or 7% per year, because you're basically putting your Aave as collateral if Aave has a problem. Okay, so what's super interesting is that this token, the stake Aave, also has voting power. So what we did is that we also enable it into Paladin. And what Paladin does is that first it takes your stake Aave and it auto compounds it for you. So instead of just claiming whenever you want, for example, every year or every 2 years, because the yield is not that big, on the stake Aave, on the safety module, what you can do is that Paladin just auto compounds for you. And you're basically just earning more money because it's automatically re-putting it again into the safety module. So it's just enabling you to have a slightly larger APY. That's the very base thing. On top of that, because you're not voting, we're lending out your vote. So right now the APY is actually not that big because there's simply no votes that are, no loans that are active. There was one last week and the APY shot up to 20%. So it allows you to get the safety module auto compounded plus the vote lending fees. And on top of that, there's two other cool things. We're doing liquidity mining. We started a liquidity mining campaign, I think 2 or 3 months ago, with a non-transferable token. So right now, the APY is not written in percentage for the pals, simply because you cannot see. We do not have a token price. This will change next week. So the APY is going to shoot up by quite a lot, and people are going to see how much we've been giving it to the community. And the fourth thing, which I think is very important, is that stake Aave has been coded in a very specific manner, which made it so the team couldn't really do any integrations with it. So by wrapping your stake Aave into Paladin, what we call the Pal stake Aave, we created a lot of different integrations which enable people to do more than what they could do with their stake Aave. So for example, today you can put it into APY and enjoy some derivative products, especially fixed yield products. You can also deposit it into Curve, and this becomes interesting because we're basically stacking layers upon layers of opportunities. And if you deposit it to the Curve pool right now, you can have up to 5 layers of yield. That's without impermanent loss and without leverage, which is actually really interesting because it reduces significantly the degree of risk while letting you enjoy much more yield opportunities and actually providing more for the ecosystem. So it's a win-win because it's enabling pushing people towards the safety model, which is good for Aave. It's creating liquidity, and it's basically enabling more and more people to participate into governance. So that's the basic idea of what we call our flagship pool on Paladin lending.
I should just mention that earlier when I was doing share screen, I had to refresh my browser. Now all the figures are showing up with the APYs. They weren't showing before, but here you can see some examples of the current APYs and also the Paladin rewards, and also in the in the borrow section, which was not showing up the calculation before. So you put in voting power of 100. The borrow period is until March 22nd, for example. And here's the borrow rate. What do I pay for borrowing voting power?
So what do you mean? Who are you paying, or what are you paying in?
Who am I paying and what am I paying in?
Okay, so you're mostly paying the depositors. So it works a bit in the same logic as Aave Compound in terms of lending protocol. The depositors are earning most of the fees. I think it's slightly over 80%. Why is it only 80%? The protocol is taking a 5% fee that's being redistributed to the DAO. And then we have 10 to 15%, I think it's 10% on this specific protocol, that are being rewarded for people who close the accounts, who close the loans. So what happens is that because this is entirely decentralized, we ourselves cannot close the smart contracts loans. So what we have is that we have what we call killers, who are like exactly like liquidators. And at the end of the loan, they are incentivized to basically close the loan and redelegate back to the person. Basically, it's just closing the delegatory module, and they are rewarded with a percentage of the actual loan.
And what do I use to pay for the loan?
Oh, so you pay the token of the protocol you're borrowing with, in essence. So, for example, if you're borrowing on Stake Aave, you're going to pay with Aave or Stake Aave. Stake Aave. This is important because it allows first the depositors to auto compound what they're getting. That's the first thing. And two, it allows to stay in the ecosystem of the protocol we're doing, which creates a virtuous cycle and an economy inside directly of the protocol. Important thing, if you actually don't want or don't have the don't want to pay in this token, or you don't have to, you can just pay in ETH or DAI, and we basically just have some kind of zap that allows you to zap it into Stake Aave or Aave if needed.
Got it. Okay, so if I'm a supplier, the people that are borrowing are paying in that same token I'm supplying, so that allows them to auto compound that token.
Yeah, exactly. So that's why you have an Aave Pal Stake Aave ratio, or an Aave Stake Aave Pal Stake Aave ratio. And in theory, the Pal Stake Aave ratio is always going to go up, like the seed token logic, because it's getting the safety module fees plus the Paladin fees. So in theory, it's always growing, and you have a ratio that's slowly growing.
Why are you guys called Paladin? Is there a connection between the imagery of the Middle Ages and knighthood and the idea of governance?
Yeah, there definitely is. So in folklore, paladins are protectors, right? They're healers. They're people who are on the quests, and I think that's very important for us in the sense that for example, vote lending can be seen as a controversial topic, but we're not building vote lending or for profit. We're building vote lending for a very specific mission, which is enabling liquid democracy and pushing, democratizing, in essence, activism. So we wanted to have something that represented what we're doing, someone that was here to be the defender of different governance, and someone that was here to uphold ideals. And we thought the idea of Paladin was very fitting for what we're doing. First of all, because there is this whole idea of creating the governance game. Governance is going to become a huge game, and we almost can think of it as an MMORPG, which is why it makes sense to have classes like this one. So that's why we created Paladin, and then we created Warden, right? And on the other sense, it's also much easier to deploy a brand on something that's really nice. So initially we were the only ones. Now we're realizing there's a security firm, a VC, and there's even an Olympus fork that I'll call Paladin. Well, frankly, it doesn't matter because I think we're here to last.
How do you guys differentiate yourself from all these other, I mean, in crypto, it's so easy to spin off a project that we're ending up with all these projects with multiple names. And when I was sharing Paladin with some other creators, they were like, I don't really feel like doing some material about another ohm fork because they were mixing up with another Paladin that's just like another ohm fork. I think it probably already crashed. How do you plan to differentiate yourselves from these other projects called Paladin as well?
So first of all, two of the four projects are mixed, do something very different and do not appeal to the same people. It's a bit different for the Paladin, what they call Paladin DAO, which is the Olympus fork. I think this is kind of going to solve itself with time because Olympus forks are kind of going out of fashion. But even if they don't, we are very different. So first of all, I don't really like to putting the name DAO in front of Paladin because it's quite obvious if you're a decentralized project, you're a DAO. I mean, you don't really have to put the DAO at the end. That's a very personal opinion. And the more we're working, the more we are developing a brand and becoming a very specific product. So I think it's going to become pretty obvious what we're going to do because we are very specialized around governance. As I mentioned before, we're not a speculation or trading protocol. We're very specialized onto one very special thing, which is governing protocols. and influence in general. So I do think we're not attracting the same crowd right now. It's going to be probably different starting next week once we're going to have a tradable token. But up until now, we haven't had that many people coming in and confusing us simply because we were not attracting the same crowd.
Yeah, of course. We were just kind of discussing how it's going to be a growing issue in the crypto space. I mean, even things called Anchor, I think there's already 3 projects called Anchor. And also there's things called Alchemy, Alchemist, Alchemix. It's
yeah.
it's all going to get crazy with all these names, and then also the token tickers. You're going to end up with so many projects with the same name. It's a crowded space.
So we had the name of Paladin like in December 2020, and at that time I was checking on CoinGecko. There was no Pal ticker. No one was doing it. Maybe there was one, but it was not Paladin. It was something else. And I checked, I think 3 or 4 weeks ago, there was like 5 people who had the Pal ticker. I was like, oh man, come on. But I do think there's something that we're forgetting a lot into crypto, is that I don't like to call the term bubble, but there's an exponentially growing ecosystem, and there's a lot of projects who are not going to try. The projects who are going to try, the attempts are not going to work, right? In the traditional world, startups, 95% fail, right? It's probably going to be the same or worse in crypto. So we're building to last. Like, we're making sure that we're building to build something that's going to be sustainable. And I think that with time, we're kind of going to purify a lot and have less and less projects. The other approach, which I'm less a fan of, but I used to be a banking lawyer, so I think it's an alternative, is that a lot of companies, they basically just protect their IP right. They have a name, it's under copyright, and when someone takes their name, they just go ahead and sue them. I do not advocate this for crypto. I think it's going to be a very sad day when we're going to start doing so. But this is what happens in the traditional world, right? I hope we'll never have to come to this, and I do think Paladin will ever do that, to be honest.
Well, comparing you to the other projects that are either called Paladin or that have the token ticker PAL, I don't picture them being active in the long term as you are. I'm just going to bring up on the screen quickly. The other PAL projects are Play and Like. And the other one I saw was Paladin Finance. I can't picture these projects being around in the next 1 year. So I think, well,
even if they are, we're probably not going to have the same thing. And I think it's important to have the logo simply when you have next to the ticker. We have a very recognizable brand with the orange. And if we just share the name and the logo, I do think we're going to basically dilute a bit the problems of confusing the protocols.
I should also just mention that you guys have some of the best design of any of the crypto projects I've seen. I met your designer also personally. He was a really cool guy. But like, how did you guys end up making sure that you have this great branding? And what do you think is the importance of branding in general?
I think it's essential. I think branding and even communication in general are becoming more and more important because we're doing things more publicly. So there needs to be more communication. You need to be much more appealing. And as we mentioned, there's an exponential number of projects. So you have to differentiate from all of them. Our product designer, which also is also in charge of all of the brand, has been with us since day one. So Paladin was created during a hackathon a bit over a year ago in January 2021. And at least that's where we brought the idea into a hackathon. And we basically all met as Anons with my co-founder and with our product designer. And we built this product. And when we said, okay, maybe we can scale this and do something really cool with it, we thought we needed a designer from the get-go because we wanted to build something that was attractive. UX in crypto is still not good enough. Even ours is still not good enough. We will keep pushing it forward. We'll keep going as far as possible with it. But it's important because it needs to be sexy. You need the people to want to come to your platform. And that's something we take very much to heart, not only in terms of UX, but also in terms of brand. So as we mentioned, we have the Paladin, we have the MMO idea around what we're building. Of course, we're not the only ones, but we're going to push that extremely far. We want people to come to Paladin and to feel related, to feel like they are in a game, to feel like there is a strong narrative around governance. And the cool thing is that we don't really have to do a lot of work because the narrative around governance is building. You have the curve wars, people want to create the token wars or different wars around the governance. It's going to come. Why is it going to come? Because all of the value of most of these protocols is going to be given back to the governance. So it means there is going to be an incentive to fight around this the influence in crypto. And this is where we shine, because what we really want to build with Paladin is how do we make governance interesting? That's very important, because if you look, we've been able to create narratives and stories around politics, around sports, but we have not been able yet to do it around corporate governance easily. And it's going to be extremely important, because we keep saying like the biggest public companies are like, they control so much, they're so powerful, and we can't really move them. But that's totally wrong. Almost anyone can become a shareholder of these companies. And when you become a shareholder, you actually have power of them. You have shareholder rights, fiduciary rights. And we're not using them today. So we want to create the right narratives and the right tools for people to be interested into this corporate governance battle and to participate into them. That's the long vision of Paladin. How do we make the governance game interesting?
Nice. I want to ask you just about the team. I met you guys earlier, I guess about a month ago, and you guys were about 6 people. Was that the full team? And yeah, just tell us about the team and who you guys are.
So today we're 8 in Paladin. We're going to keep growing a bit. We don't want to grow too much. We would rather grow through the DAO. We think it's a more interesting approach. In the team, there's myself and my co-founder. I'm more in charge of the non-technical part, and my co-founder used to be a security engineer and is in charge of the smart contracts. We have 2 full stack devs, 2 front-end developers. We have 1 product designer, 1 person in communications, and 1 governance analyst. So yeah, that's the whole spread of the team. We would like to have someone a bit more around product marketing, and probably 1 or 2 more devs. But after that, we're probably going to be full as a team in terms of what we have for this quarter in terms of development ambitions. It's interesting because contrary to a lot of different protocols, we've been decentralized first, but almost by random, because we started during a hackathon and none of us knew each other. We met on Discord. It turns out my co-founder is also French, but we realized that 10 days after working together, when we got in a call and started talking in English, well, you can hear my accent, like we cannot hide as Frenchmen, unfortunately. And on the other hand, my product designer is in North America. I have 2 more devs in North America. We had someone in Mexico. So the team is big and it's totally decentralized. We work asynchronously. And that's very important because it means we can transition from a core team directly to as DAO contributors quite efficiently, because it won't change the culture of what we have been building. And I think that's something that separates a lot from different and other decentralized protocols, where the core team actually has an office and is a company, which means that slowly they're going to start having incentives to behave like a company. We probably will never have so, because we try not to have them.
This is kind of going off on a tangent, but everybody jokes about DeFi being the future of France. And you mentioned that you're from France, your co-founder's from France. I'm assuming some other members of your team are from France. Tons of other DeFi projects are from France. You have StakeDAO and you have AP1 that you mentioned before, and a bunch of other ones. Why do you think that the French, I guess, DeFi community is so strong? Is it because of the meme, or is the meme because of the different projects, or no connection?
I think the meme comes from the fact that it was a Frenchman in almost all of the big projects even a few years ago. To be honest, I would not be able to give a specific idea. Like there are people from everywhere. That's the whole point of global communities, right? France has some pretty strong mathematics and programming profiles, so I do think it comes from that. But there might be something like the French values and the crypto values stick around a lot. Like at least they resonate with me, and I'm sure I'm not the only one. But from what I've seen, it's kind of a meme in the sense that you have people from the US or people from China or from Canada, and they're like also in every project. So, I mean, in the end, it doesn't really matter where we're from, especially in crypto.
So is there a possibility that instead of just being a typo from the future of finance, some French member of a prominent crypto team purposely changed the spelling?
I mean, it's good marketing for sure. I don't know. Sometimes I have some typos on my computer or on my phone, and I'm like, oh my god, that would make a good meme. It's probably a bit of both.
Nice for sure. So you mentioned you have several products. The first one is the Vote product, and you have a second one called Warden. What's that?
So it's also a Vote product. It's going to be the second and quote unquote last. There might be another one, but after that, we're going to move on from Vote lending into R&Ding on other stuff. That's at least what we want to do. It's what we call phase 2. We're going to focus into voter coordination. Warden is a marketplace for boosting power and curve. At least it used to be. It's what the V1 was that we released 1 month and a half ago. Warden is going to morph into a full stack vote lending platform for veCRV. The reason why we had to give a different name and create another application is because the curve ecosystem is different from Governor Alpha and Bravo. So it means that we had to use a different architecture, and we had long discussions with the team. In terms of brands, it was important to separate both dApps because they function differently. So as you can see on Warden, what you can do is that you can check how much veCRV you have, CRV and veCRV you have. You can loan out that veCRV, just a boosting power for now. And if you go into the Boost marketplace, you can buy out Boost. So what does this mean? It means that if you don't want to lock out veCRV, but want to maximize your CRV yield opportunities, you can just buy the boosting power. So that's super efficient for people who want to farm on curve, but who are not ready to lock. And if you look into the market tab, the sub tab, sorry, you can see all of the offers. So today, Warden has roughly 5 million veCRV onto the market, which is enormous. It means that you can buy 5 million of veCRV to boost your own pockets. That's 1.5% of all the veCRV supply, I think. And we haven't done any marketing because we released 1 month and a half ago to try the technology and to gauge the interest. Because we had a V1.1 in mind that's going to be released in roughly 1 month. And this time, you're not only going to be able to loan out your vBoost, but you're also going to be lend out your gauge access. What's really cool about Curve, in opposite to the other protocols we discussed, is that you have 4 different access on Sulok. You have the admin fees, you have your governance power, you have your gauge power, and then you have your boosting power. And these all call different functions, so we can create different marketplace for all of these. This means that once you have veCRV, you can choose what you're going to use and what you're going to loan out. And on top of that, for the gauge and for the boost, you can choose how much you're actually going to loan and how much you're going to use. So for example, you can choose to only loan 10%, 20%, 30%, and the rest use it yourself. It's much more modular. What's really cool about that is that everyone has been building wrappers and different new solutions for veCRV, trade derivatives on top of them, like the VLCBX and a few others. But no one has actually been saying there's 400 million veCRV that are locked by users, and they're watching on the sidelines people having fun with the VoteLock CBX and things like that. I think that's unfair. There's a huge user base of veCRV, especially the OGs, who are basically stuck and not seeing any new product. So with Paladin, we're actually trying to start by giving opportunities to these people.
Very cool. And do you have more products in the pipeline?
Yeah. Yes, we do. So the way Paladin was built is that we built the protocol, and people who participate in our community calls know about this. We built 3 phases. So the idea is that we want to build 2 main economic engines that are going to finance everything we're going to do, and then we want to link them together with coordination technology. Our hunch is that crypto was created to scale coordination, right? So if we're actually theoretically able to do this with algorithms, it means that we could probably enable minority holder coordination, in the sense that you don't need to be one large centralized entity to control governance. A large amount of small owners could actually help control governance. And that's what we're trying to achieve with Paladin, right? So to do this, we'll have the first vote lending block, which was Paladin and Warden. We're going to have a second block, which is going to be about governance clarity and attention. And then we're going to build a minority holder coordination. So minority holder coordination is phase 3. What I just described before is phase 2, and we're slowly going to enter into it. And our idea is that we do the R&D, we sustain the dApps, and we slowly do this transition by having the DAO slowly taking over these apps and their operations.
Very cool. Actually, what caught my eye when I was on your website as well, aside from the products, was that you have done a raise from some prominent crypto native VC groups, including Galaxy Digital. Can you talk about that a bit?
Yeah, so not only digital natives, we wanted a full range. What happened, well, it's very simple, is we've been building on for Paladin for over a year. At some point, you actually have to earn money, right? And you have two choices. Either you do an ICO or something like that, which, if you are doxed, is most of the time illegal, especially in Europe. Or you have to raise from private investors. We chose to work with private investors because they offered more value and in a simpler manner for us. So we're very happy about the prominent VCs we're working with because they've been a great value add, but also because they've helped us legitimize what we're building, which we think is very important. So we actually did the raise last summer. So I think it was in August, and it allowed us to keep building the project. And it's basically allowing us to pay for the core team for the next few years. That was the idea of what we did behind this fundraising.
Did you have a chance to speak to the legendary Mike Novogratz?
I didn't, unfortunately. We haven't chat with him. We work with someone called John Cole and someone called Leland Deep, who is a very strong profile on governance, and I advise everyone to read his articles. They're already legends, to be honest. It's a very big team, but it's the case with a big number of our VCs who are very specialized around governance, and I think that most VCs are not aware of it, how powerful governance is, because once you invest in companies that actually have a governance token that's going to have utility, you're not only investing in the potential revenue you could have, because of course, as investors, they're investing to make profit at some point, but on the long run, you're also going to own assets that are going to create value for us. So if you're a VC and you own Aave, or if you're a VC and you own Toke, or if you're a VC that owns PAL, you can come to new products and you can tell them, and that's not only true for VC, it's true for everyone. You can tell them, look, if I invest in you or if we work together, I can actually help you getting listed into Aave as a collateral. I can help you get liquidity through Toke. I can help you get influence in DeFi because I have PAL. And I think it's going to become a bigger and bigger argument for projects, for DAOs, for VCs to actually work together with other people, because governance is going to become more and more important. We've been sleeping on it for the past few years, and like there was some kind of awakening with the curve wars, but we're not there yet. Like people value more the speculative premium than they value the governance premium.
You mentioned that with the funds from the raise, you can use that as a runway to pay for your contributors and team members. So does that mean that you are paying people using fiat, or you've converted that to crypto?
No, so we're only paying the core team with this fundraising. We're being very careful about that. That's what you're mentioning is a very specific challenge. So right now we're going to start paying contributors. We just opened a few bounties. We're going to open working groups next month. We're going to pay them in PAL, and the whole challenge of the next 9 to 18 months is going to be able to transfer from the optionality to be paid in PAL, our own governance token, or stablecoins that are going to be made by the DAO. The core team, actually, one of the companies of the core team, the one which raised the money, and the DAO are very different entities, and we have to I very much want to separate both of these, because one is the DAO, controls the product, has treasury, and one is the core team, and we are basically our job is to build the software. It's not anything else.
Okay, and you mentioned the PAL token a couple of times. What is the PAL token, and what does it do?
Okay, so the PAL token is the governance of the PAL ecosystem. It's a bit unique in the sense that we try to look and take a bit of what we liked and thought was very efficient in all of these protocols and make something that made a lot of sense for the global picture of what we built, but also for all of the different stakeholders that are going to appear in the Paladin ecosystem. So what we ended up doing is that we have a tiered token. So you have the normal PAL token where most of the liquidity is going to be, and that's the speculative / tradable token. The second layer is you can stake it, a bit like the stake Aave, and you have a 10-day cooldown. This enables you to participate in governance and earn a slight inflation bonus. And if you want to align with the protocol and truly benefit from Paladin, you have to lock it from 6 months to 2 years, depending on how much you want to, how aligned you want to be. The more you lock, the more boosted voting power you have, so you control a bit more the product, and you're going to earn boosted inflation. And on top of that, you're going to get access, starting probably this summer, the time we finish coding, something called the chest, which is the crystallized influence. And our idea is that different stakeholders will position themselves at different layers. So for example, traders, they're going to stay with PAL because they just want to buy and sell the swing. Then you're going to have people who are spectators, who are interested in projects, or large funds who cannot take too much risk, who are simply going to stake it and take, well, just have what we call the holy PAL, the HPAL. And then you're going to have the contributors, the people who want to align, the governors, the people who actually need influence, who are going to need it on the more longer term. They're going to directly align with the protocol and lock the token. So that's the whole picture of our tokenomics. Now, why is the chest so cool? What the chest does is basically it will take, right now we're at 50%, we can maybe raise it after that, 50% of all the protocol fees and compound them into something called a chest, which is going to be shared with all of the locked HPAL holders. So what does this mean is that you can use them to recycle the funds in the chest into Paladin Landing, into Warden, and into our next applications. And the idea is that in a few months, maybe in 2023 maximum, we're going to have our protocol that's going to give access to the whole range of influence you have in crypto. So gauges, votes, boost, etc., etc. And you'll basically be able to use HPAL as a discount or as a way to access free influence, depending on the size of the protocol revenue. So that's the basis of our tokenomics. And we think it's really powerful because it's going to in the end, when people will understand, and we're going to try to make it as clear as possible, the power of this tokenomics, all the governors and the contributors are going to want to have HPAL because it's going to make their life easier.
I have a question about where the token stands right now. So I'm actually a PAL holder, not a big holder, just have a small bag because I got it as part of an airdrop. I guess I'll ask you how the airdrop worked, but also aside from the distribution, I wanted to ask, so I believe that the token is currently non-transferable. Is that the case?
Yeah, so what we did is that we wanted to reward the early contributors. So there was first an airdrop that was used to attract all of the governors in the different large protocols we're building on. The airdrop is now closed. And now we rewarded with liquidity mining the liquidity providers and the people who contributed to the DAOs, to growing the DAO. That, in a sense, around 2% of the supply was distributed this way. We're going to sell as much during the LBP. So it's going to be a 4% of the total supply, which will be available at that point. And the idea is that the token was non-transferable. As I mentioned, we're not a speculative project. So we did not want to be hindered by all of the trading, the price talks, and all of the liquidity question. It allowed us to attract a lot of very high quality contributors who were not here for the money. But now we've kind of hit the limit of what you can do with non-mercenary capital, and we want to open up the product to basically scale. So yeah, that's the idea.
When will the token become transferable officially?
The token will become transferable just after the LBP. So we have an LBP coming up on the 21st of March. It will end on the 24th of March at noon CET. So at that point, the token will become transferable and people will be able to trade it.
Where will we find this LBP?
Oh, so the LBP is made in partnership with Prime. So it's made on the balancer technology, but it's going to be made on Prime launch.
And what's the overall goal of the LBP? How much are you looking, how much PAL are you going to be selling during this? I mean, ideally.
Okay, so that's a very important question and it's formulated extremely well because we're selling 1 million PAL, so 2% of the supply. There's a 50 million total supply maximum. And what's really important is that we're not raising to finance the core team. As we mentioned before, we have a few years runway. We're doing it to finance the DAO, and in a very specific way. It's not to pay contributors. What we want is the DAO to own its own liquidity. We want to create protocol-owned liquidity, and by selling 1 million tokens, usually in an LBP you get to a 50-50 limit, the DAO should own roughly a quarter of the supply and will just LP with it. And the idea is that by dominating the LP market, the DAO will be able to profit from the actual trading that's happening. So while we do not think trading is the best approach and the spirit of Paladin, we are totally okay with it happening, and we would rather not control it, but profit from it because it's going to create a new revenue model. So it doesn't really matter how much we raise because the strategy is going to stay the same. Personally, I would like us to raise a few million simply because it's going to be much more healthy for the DAO to grow. But I guess we'll see. The way the LBP works is that it's a Dutch auction. So it starts with a high price. And it's going to drop until people buy it. So we're going to see when people from the market actually feel comfortable with buying the token. And that's very important because it means that neither us as a core team nor the DAO will have to decide on the actual price of the token. We just have a decentralized pricing mechanism that's going to allow us to see what the market sees in Paladin.
And once it does start trading, do you guys have an idea of what platform or which DEX you want to put it on?
Yes, it's going to be available on Curve and Balancer.
Interesting. On Curve, that will be a factory pool?
Yeah. So yeah, it's going to be a factory pool. So there's a very big logic behind it, and most of the liquidity will be on Curve. The reason why it's going to go on Curve is that, as I mentioned, we create positive feedback loops with the protocols we're building. And Warden is basically a marketplace to buy Boost and eventually to buy Gauge. So it's simple. We think we have the best product on the market with Warden, and we're going to be able to showcase it in April. So instead of telling people we have the best product, we're just going to use our own protocol liquidity, acquire the Gauge, max boost our liquidity, and make a ton of money for the DAO. I think it's the best marketing approach. I don't really care what people think our product. We're just going to use it and make a lot of money with it.
Do you personally, or do you guys as a team also have personal stacks of Curve?
Very lit. Actually, I think my whole team doesn't, which is a shame on them. I have a few CRV, very proud of having them. They've been locked like almost since the beginning, since veCRV was introduced. So I've been one of the people who have been looking on the sidelines of the success of Convex, etc., because I had my locked CRV. So maybe it comes a bit out of spite what we're building.
And the trading pair that you're looking to put on Curve is going to be ETH PAL?
Yeah. So we decided to do the LBP in ETH because times are a bit more volatile, and it's especially volatile for new token. So we wanted to start with an PAL ETH liquidity, and it's going to also to be PAL ETH on Curve.
And this seems, everything that you've mentioned so far seems like it's being built on mainnet. Is that correct?
Yes, it's built on mainnet on Ethereum.
Do you have plans for any L2s or multi-chain?
Yes, of course. We've been requested this a lot by the community, and we totally understand that the gas fees are quite large. Lately, they've been a bit more acceptable, but they're still quite large. The answer up until now was that we are looking at what different protocols we're doing in governance, because there is no point in going multi-chain if there's no real interest in governance. Paladin is interesting where governance is conflictual, right? Where people don't agree, where there's a more and more incentive to participate in governance, which was not that much the case until a few months ago. Now we've seen the rise of Name Finance. I see they're talking about the Chi Wars. I do think they're going to happen. It's a great project. It's on Polygon and Phantom. We've been seeing a few things happening on Solidly. We've been seeing things happening, I think something called Beethoven on Phantom, but I'm not the biggest connoisseur, and we've been seeing interesting things cross-chain with 100 Finance too. So I'm not saying we're going to integrate these projects. I'm saying that these are projects where there's very interesting traction around governance, and we're looking a lot at them.
Okay. And regarding earlier you mentioned that you have some competitors. Can you mention them by name?
So it's a bit complicated to call these competitors. We don't really do exactly the same thing. But if you look into Gauge lending, you have Votium who dominated the market. Bribes.crv is not available, unfortunately, anymore. And Votium does it on Convex. We will do this on Curve. I think you have a few other projects who are building bribe projects. I do not think bribing permissionless, like on every protocol, is going to be specifically relevant, because most products will simply have no people simply won't care about bribing the governance. Like just adding B tokenomics is not going to change the interest people have in your tokenomics. And I think there's someone else that does vote lending on Aave. Bribe protocol, I think. I don't know what's up with them, to be honest, but they've been building something that's similar to Votium, but on Aave. And to be honest, I think it's a bit of a dangerous mechanism because it's an auction mechanism. So I mean, it's quite easy to potentially take over the governance, and that's not the point of what we're building. It might more destroy the governance than do anything else. And also, if you do not have revenue, which is like if you do not attract loans, you're simply not going to create APY and not going to attract on the longevity the TVL, which is why we've been extremely careful on our StakeAve pool to keep having loans coming in, to keep having the auto compounding module, to do the liquidity mining, to be sure it's the most profitable place for people to park their StakeAve. And this has proved successful. Our pool has been growing between 10 and 25% a week for the past 3 months.
Regarding decentralization, how do you guys plan to decentralize over time?
Oh, that's a very important question. So we've tried to be much more decentralized than a lot of products from launch, in the sense that we actually didn't have any token. It's the DAO who voted on our allocation, which is vested, of course, but we still have a bit of token right now. We try to have push the DAO in a way where contributors and people in general are always dominant, majority shareholders of the actual protocol. And we cannot touch the smart contracts. The only thing we can do is pause them to actually, in case of a problem, we can actually go in and take the TVL as a team. We're going to try to give all of the operational work slowly as working groups to the DAO, which is business development, marketing, communication, treasury management of the DAO. All of these will be passed over into the DAO. And then we're going to start building product with other teams to start decentralizing also the development of the project. But we're here to stay. We're not here to dictate the market. We have a vision, very specific vision of the project. We hope the community will follow us, but they can actually bring more flavor and a better vision than we actually have. And we're really open to this. I think Paladin is never going to be a project I myself or my team will be able to do on our own. It's something we'll actually achieve together. And there is no other way to do it because it's such an ambitious project.
And just like you were mentioning, you're concerned with the long-term viability and decentralization of these major blue chip DeFi projects. You guys are positioning Paladin also for kind of a future with no team involved. Is this going to be autonomous code that's running?
Well, it is already autonomous. So Paladin or Warden do not need us to function. If I disappear today, the project will keep on running, to be honest. We want to go further into that logic in the sense that we want something that's going to be led by contributors. We want to start some kind of movement around Paladin, but this takes time to do. Fortunately, something we've been very careful on, and that's why the circulating supply is quite low, is that we want to give several decades of outlook for the DAO with their current fund. So that's why we haven't been giving too many tokens, because we would rather not give too much at the beginning and slowly giving way and building the traction with it.
Very cool. Integrations. I want to ask you about that. You hinted briefly earlier about APY and you talk about Curve. What different platforms or protocols are you currently integrated with, and which ones, if you can leak any alpha, which ones will be considered maybe in the future?
I don't know if we can talk about like any integrations in work, simply because we're studying what we could integrate right now. We don't have any major announcement to make. As the team, we've been more hands-on on the tokenomics and the view 1.1 of Warden and actually other integrations. We've released 3 integrations for StakeAve like in the past 2 or 3 months. We talked about the one with AP1. AP1 does fixed yield products, and we thought it was very interesting to offer these solutions on top of Aave. So this is what we've built with them. We've built a curve pool that allows people to enter and exit Paladin directly with Aave. So it roughly has right now 2,000 Aave of liquidity. It's growing, and yeah, it's quite cool. And we also created something with Paladin Finance, which is called a Garden. It's a strategy, some kind of vault that directly does everything I just described. So deposit into Paladin, then deposit into Curve, and allows people to earn in a much easier manner the whole stack of yield opportunities. So you're going to get the safety module fee, the Paladin liquidity mining, the Paladin fees, the Curve fees, the Babylon fees, and on top, once we have a Curve cage, the Curve fees. So that's really cool. And we're working on a few other things, like, for example, creating a lending opportunity for the people who have deposited into Paladin, but this is a work in progress, of course.
How does it work with either integrations or the decision to add different DeFi governance tokens with governance in general in Paladin? Is it done by vote or is it chosen by the core team currently? How does that process actually take place?
So most of it, we did it ourselves until now because we were in development. The DAO was not as functional as it is today. We are slowly going to transition of things by vote. I do think it's very important to take into account that there is no actual meaning in creating and adding simply a governance because it's interesting or because you have bags in it, simply because no one will create loans on it. If people don't care about your governance, well, people are not going to borrow on it. It's a very simple fact. And even worse, if people don't care, we could accumulate very quickly an overwhelmingly majority of the tokens into a Paladin pool. For example, if we did liquidity mining on top of it. And the problem is that it will attract bad actors. So it's actually a very complicated question because when we released, we decided to go on Uniswap, Compound, Aave, and Idle Finance, right? And we're realizing that some governance are working much more than others. For example, the Stake Aave pool and the Aave in general is a huge success because we see the needs and there is much more needs to participate in these governance than in the other ones. So our current thought is that we should focus on the winners, on the where we're attracted, focus our limits on them, and then build for other where we see there's a huge demand. So for Paladin right now, our core idea is maybe we should focus on Aave and Curve and iterate once we see other opportunities. But maybe this will change. Like there is nothing fixed. Only people don't change. Stupid people don't change their opinions, right?
For sure. Or the crypto space, you just ride your opinion down to zero sometimes.
I mean, it's the risk, right? Risk management.
For sure, for sure. I want to ask about your roadmap. You mentioned that on the 21st, you have the LBP. What else is coming in the short term and then later on in the long term?
Oh man, so many things are coming. So we're a bit intense because the core team works a lot and the project is quite large. So for a brief recap, we released early October the V1 of Paladin Lending. We released Warden early January. We have the LBP coming in on the 21st of March. Straight after, like end of March, maybe a few days after, transferability will be enabled and the tokenomics will be available from the get-go. So you will be able to stake and to lock the tokens. That's something very important. And then on top of that, early April, I would say mid-April, we're going to release the V1.1 of Warden, where people will be able to not only sell their boosting power, but also their gauges. So that's a project we teased during the last community call, which is called Quest. It is nothing like the current the bribes that exist. We created something very novel, and we're extremely eager to show it to the community in general because we think it's going to attract quite a lot of people. After that, we've been reworking Paladin Lending to create something a bit more composable than even it is right now. And after that, we'll be working on phase 2, which is how do we bring more clarity and coordination to governance in general? So there's quite a lot to do only in 2022. And I'm not even going to mention 2023 or 2024 because it's not that the roadmap is big, it's that the project has infinite potential. And we've been talking about crypto market, but all of this could be iterated on public markets too and be owned by a DAO, which would be extremely cool. Paladin, we're very ambitious on what we want to build. And I think like we'll be able to unveil more and more as time goes.
Hold up for a second. So you've actually discussed potentially having plans to expand outside of the crypto space when it comes to governance?
Oh yeah, I've been very public about that. Like everything we're inventing, like what's really cool about crypto is that it's a huge sandbox to innovate for governance, for economic and social layers, right? So we're evolving at a huge rate, right? It's exhausting to follow what's happening. What you see is that on the other side, most of the financial in traditional finance, the financial assets are not evolving that fast. So we're slowly creating superior technology. And like in 1 or 2 years, we'll be able to port most of the technologies we created in DeFi and just totally obliterate what's happening in traditional finance simply because they're not up to tune. They don't understand and follow the rate of communications that's happening on the internet. They cannot create technology that's as composable as crypto as it exists in crypto, and they cannot coordinate as efficiently as us. So I think that's something very important, is that everything we're creating in crypto has replicability in the traditional markets. What I think is very interesting is you create a private company, like a startup on top of separately, or can you create a DAO-owned spin-off? And that's kind of the vibe we're going for if we ever do this.
That's a pretty ambitious goal, but it sounds really cool and really innovative. We got a couple more things to cover. I don't want to go off on too many different tangents, but security. How do you guys make sure that your platform stays secure?
Okay, so that's actually a very good question. And to be honest, my co-founder is very paranoid about this, which is a good thing, I would say. First of all, we audit our code. The Paladin lending was audited by Pessimistic. The smart contract and the audits are, of course, open source and public. We also have a bounty on Immunify. So for Warden, for the V1, we've actually been a bit more adamant about not actually doing an audit because of speed, but also because we didn't feel it was necessary. As on Warden, it's a non-custodial dApp in the sense that we only have the right of delegation of the veCRV, who is still in your wallet. So even if you hack the platform, only thing you could do empty are the rewards. You cannot touch to the underlying collateral because they're locked in your wallet as a user. So that's why we didn't get an audit for the V1. We're actually getting the audit of the, I could have added this in the roadmap, of the V1.1 that will happen end of March, early April. So that's why we have to wait a bit to release the V1.1. It's because it's going to get audited. So we're very adamant about that. We've been talking with Certora about doing real-time verifications. We're not there yet because we're still discussing about how we should do it and how efficient it is going to be for us. But of course, security is important for everyone, and it should be, right? We're hosting, in total on Warden and on Paladin Lending, we have roughly 20 or $25 million of TVL. And I think we're at 22. We're at 22 with the current market valuation, right? So we are aware that we are, our smart contracts are responsible for quite a lot of money today, and we are sparing no expense to make sure that there won't be any problem.
Do you keep DAO funds on a multi-sig? And if so, who is on it?
That's a very important question because it's going to transition. We have what we call a core team multi-sig that has the DAO funds, and that has, actually, we just have the token, the governance token. The DAO funds are still in the smart contracts. We're in the process of migrating to a multi-sig that's going to be entirely owned by the community because we think it's essential once we'll have a tradable token. Right now on the multi-sig, we have 3 members of the team, the 2 co-founders, of course, and we have one of our investors and 1 member for another community that wish to remain anonymous. I can't ask if he wants to be revealed, but he works in a different protocol, and we just took someone at random that we thought like had a good judge of character and who could just say, yeah, no, guy, I don't agree with this. So today it's a 3 out of 5. This is going to change in probably this week, where it's going to be, I'm not sure if it's going to be a 4 out of 6 or 4 out of 7 with only 2 members of the core team in it.
Very cool. Just some last questions about the Paladin community. How would you describe your community? Do they have like a particular name?
We actually don't. I think we should. We like to call them the pals. You know, it's because it's a funny little name, and or we call them the knights. But I do think the knights has been overused. We could probably just call them the pals because it's also the name of the ticker, right? It's a very interesting community because it has succeeded in attracting very few mercenary people. We have a lot of contributors from other DAO that jumped the ship and said, okay, either I want to contribute or follow what's happening. And it's good because it allows us to have a very good perspective and outlook on what we're building and approach different DAOs much more faster because simply we already have people who are working in them and with us.
Do you have different roles in your Discord server, like different levels of community members?
Yeah, so we actually had a system that enabled people. Everyone starts as a squire and you can evolve into a wanderer and then into a warrior. And eventually, what we call the core team was the Paladins, but we're going to put the people in the working groups as Paladin too. We're revamping the system for it to be much more rewarding for the people who are actually doing the steps because it's not good enough for us now. Yes, we're building our small ecosystem, and we're actually really happy with the people who are contributing today.
When you say being more rewarding, that means like getting actual rewards, like in PAL?
Yeah, so the point is that the whole challenge that's going to start after the token becomes transferable is, can we make in the next 9 to 18 months the DAO entirely sustainable, in the sense that can the DAO pay not only in PAL, in governance token, which is going to start doing, but maybe in USDC or ETH contributors. So people working with the treasury, people doing business development, people doing marketing, can all of these people just be paid in a sustainable way because the protocol has sustainable revenue? That's the next challenge.
Can you just briefly, so what are all the different ways that you can earn PAL? You can be a staker, you can supply your funds on the Paladin Vote platform, you can be, what else can you do?
So very quickly, I think there's 4 ways to actually earn PAL. You can be a depositor into Paladin lending, but the liquidity mining is of course going to be reduced. You can answer bounties. So we have a few bounties that are on D-work, and anyone can come in and accomplish them. So it's going to be about translating articles, being a scribe for the community calls, making artworks, writing articles, etc. And then you can also, you're going to be able to enter working groups for business development, marketing, or treasury management. And the third way is going to be, very soon you'll be able to get liquidity mining when you buy boosts on Warden. We've been working on the technicalities to enable this. This will probably be done after the LBP, but it's something you'll be able to do. And the idea is that it's going to become very financially interesting for people to actually borrow boosts. The fourth way, well, it's buying in the LBP, guys.
Interesting. Do you have, do you still do the Night of the Week competition?
No, we stopped it. Initially, it was to reward competitors, but now that we have bounties and we're going to have working groups, we thought it was not relevant anymore. I think you're the first Night of the Week, right?
I think I might have been the second. I made a video back in the early days. I'm not really sure which one it was, but I have that NFT in my wallet right now. Speaking of NFTs, do you guys have any plans to do anything with those Night of the Week NFTs or future NFT integrations?
So we have a few NFTs that are pretty cool for the community. We have the Paladin OGs, which were the 18 first contributors of the DAO, which help us build the DAO. I think 9 of them are still very active in this Discord, which is a really high ratio. We have the Night of the Week, which were the people who helped spread the word on the different social medias. You're one of them. And then we have plus NFTs, which are mailed with veCRV. I don't know if anyone knows them. She does very wonderful NFTs. And I think there's 30 of them in total. So we're still working out what we can do with them. It's not easy to do something that's not unfair towards everyone. So we're trying to find the best way to incentivize all of these tools. I don't know exactly what we'll do with them. We will definitely do something. We're not sure yet what to do. We also have a few other NFT projects, but nothing we can talk about publicly yet because it needs a lot of work to be ready. And to be honest, we announced a lot of things for a core team of 9 people. It's already quite a lot to handle.
Got it. So people who listen to this interview, they hear what you have to say about Paladin. They think it sounds really cool. It's awesome. They're sold on the project. They want to get involved. What do you recommend as a call to action? What kind of steps should they take next to either get involved with the project or just participate in general, become a token holder, and so on?
So I think the most interesting is always going to join the Discord, discuss governance with us. There's a lot of huge governance nerds in the Discord and a lot of experts, to be honest. Read our articles on Medium is always very nice because we try to set up the tone of it. And then you can start contributing. I mean, you can buy the token, of course, get exposed to PAL. That's the whole point of it becoming tradable, right? But I think the most interesting is starting to contribute. Today in crypto, we've been very adamant about the value of bringing capital in, of literally owning the token. I think that's the most important, and that's something we're going to aim to reward in Paladin, is simply participating in our DAO, in other DAOs. It's so important for us to have actually contributors and to push the DAO forward. And we're going to see this, like the DAO contributors are going to be some of the most valuable things in crypto.
Very cool. Well, just to repeat, the LBP is on the 21st, and where we'll be able to find it?
It's going to be on Prime Launch.
Okay, on Prime Launch. So we'll post all the information that we can. And if you want to be kept up to date with stuff with Paladin Finance, check out their Discord. Also follow them on Twitter. Really cool guys, really cool team, really cool project. And thanks for the chat.
Thanks, man. It was a pleasure.